Hey everybody, Ty Crandall here. Welcome to the show. I'm really excited you could join us. Today is like a one-of-a-kind session. We've never done anything like this before, but this topic is very near and dear to my heart. It's really the base, the root of what we do here at Credit Suite, because we believe very much in you knowing how lenders and credit issuers work so you can kind of beat the banks per se. So you know their formula, you know what they're looking at, and you can meet that criteria and get approved. So with us today is John Matheson. Now, John is the CEO of Commercial Loan Success, software and education platform that's designed to help small business owners and property investors to make more informed financing decisions. So using the Commercial Loan Success loan analysis software platform, commercial borrowers and commercial lenders can communicate more effectively, and borrowers are able to approach commercial lenders more confidently, which we'll talk about a little bit later, already knowing that their transactions are lendable. So through Commercial Loan Success, John hopes to provide the resources and education materials that help small business owners, entrepreneurs, and real estate investors, and that can definitely be used to obtain funding and grow their businesses profitably, all without being at the mercy of the predatory lenders, which we're going to talk about exactly what they're looking for and what he does to help you know that before you even walk in the door. Now, John's also the managing member of J. Healy Development, LLC. The company specializes in developing new projects in sustainable properties. And John's been in property development business for 26 years now and has been involved in transactions for developing, permitting, and or financing completed projects totaling over $50 million. So through J. Healy, John focuses on making multifamily, mixed-use, storage, and other commercial development properties more green and sustainable, lessening a property's footprint while increasing its value. John, thanks for coming on with us today.
Oh, happy to be here.
I'm really excited you can be here because what you do, and I've kind of already named this show today, the loan approval formula, because that's really what you do. I mean, you're behind the scenes and you're peeking in and you've kind of decoded, not for a product, but for you guys, what you do, it sounds like a formula to find out what these lenders are looking for. That way you'll know if a deal fits before anybody even applies. And now it sounds like you're rolling that out to the rest of us to take advantage of, after hoarding it all to yourself for 20-something years. Is that about right?
That is about right. And the basic question, right, that we just love about what it is that we do is, who wouldn't want to know? In your audience land and anybody you and I know in this business, who wouldn't want to know if their numbers pre-qualify for a commercial bank loan application before they ever speak to the lender? Who wouldn't want to know? And so that's what drives us forward. One of my favorite commercials on TV, that credit score commercial where the girl walks in the banker office and she puts her feet on his desk because she's got the 780 credit score. And the banker's going, well, the rate. She's like, oh no, I have a 780 score, and up go her feet. And now she's going to get the rate she wants. And that's what has been missing from commercial lending in the process. And I am no different than anybody in your audience. I started both of my businesses back when I was in my 20s with $300. So it's not like I came from any place where I was, given a great big opportunity to start, and I had to grow my businesses piece by piece. So you can imagine I've taken every single possible lender financing option that there is to take over the years to grow my business in real estate, especially, and then into the software. And so you end up with private lending, you end up with friends and family rounds, you end up with business financing, business credit cards, credit lines, lender financing on properties. And every single time that I would go for any type of a loan, and I've probably, if I were to actually add it up, it would scare me. It's 8 digits of bank financing over the years of what I've taken. There's always that trepidation and almost dread of the process, because it's like this big mystery out there in commercial bank land of what is it that they're qualifying you with? What's the formula, Ty? I walk in with a real estate investment. I've got a 10-unit apartment building, and I'm going to go buy it, and I'm going to try to get 75% loan to value, let's say. How do I know what metrics they're using to underwrite me? And so the typical way that all of us did it up until at least when we started with the software was, all of us would say in development space, okay, here's my project, and we do some kind of executive summary. We'd give the bank some kind of write-up with our numbers, be it pro forma or actual numbers of where we were. We'd submit a nice package, and what would we do? We would wait. And we would wait to hear. And we were lucky to hear in a week to 10 days if they were even going to give us an answer on the loan. And in this type of market that we're in now, things are moving quickly. If I make an offer on a property today and I had to wait 8 to 10 days to tell the seller if I was going to be qualified to do it, there'd be multiple offers in the Northeast where I am. So you have to be more nimble and quicker, and you have to be able to know where you stand and due diligence with your lender today a lot faster.
Yeah.
So that's, so how do we solve this?
Well, and I think it makes a lot of sense. When we survey a lot of our database, what we find is that about half of them have tried to get financing and failed, and about the other half never even bothered applying. And both of them really tie into what you're describing because they just don't know this. So from your experience and your whole score and platform that you guys are building that helps people quickly determine if they are lendable, what do you see? What kind of factors do you see that's really affecting somebody's a business owner or investors ability to actually go out and get a loan?
So when we I'll get to a little bit in a minute. I'll get to the history of the software and how I got involved with it with Dan Crowley, who actually wrote the code for it. Dan's a commercial banker with 30 years of a tremendous resume and experience. And before I get there, let's talk about qualification. That's your question. And as you know, there's two types of. Let's just break the commercial bank business down as entrepreneurs. I'll talk from our side of the desk and not the banker side. The way we see it, two types of loans. It's secured or unsecured. And in secured space, let's work with a commercial mortgage on a property just for today's discussion. There's a wonderful book out there. It's by a guy named Michael Reinhardt, and it's Commercial Mortgages 101. And in there, he breaks down very succinctly what happens in commercial bank underwriting on properties into three parts. The bank actually can do an underwriting analysis quickly on your cash flowing real estate transaction if they have net operating income, which is your income minus expenses, historically documented from a credible source, like a tax return or something legitimate, a capitalized value or an appraisal on the property, and finally, the debt service coverage ratio of the property, which is the measurement of how much cash flow covers the mortgage payments. And the banks have metrics of like 1.25 that they like to see on that. If they have those three things, they can give us an answer right then. The flip side then is they're going to look at all of us as a sponsor in a real estate transaction, and they'll do your personal reviews and your experience, and that can come with a different set of requirements. But just to know on the property, those are really the three things that they need. And what our software does and what Dan's written, Dan's a commercial banker. So he understands their underwriting and their metrics because he is one of them. And so what he did is he actually had in his private consultancy where he was using software that would run banker style metrics up front for his clients to know if they were likely a stop or a go at a commercial bank before he would even bring them into the bank. And the resulting output of the software is on one sheet of paper. And it's called we call it a CLS one sheet. And on that one sheet of paper, it's written in bank terms. So the banker deciphers. It's not written for me as the entrepreneur to read. It's written in bank language. And it speaks very fluid bank. And what was happening now is all of us using it and our users at Commercial and Success are download, printing, and sharing their Go validated one sheet with their banker as a conversation starter. Because like in Michael's book, that's what the bank wants to see. Why give them anything else other than what they want to see up front to determine if this is in fact a loan they'd like to consider the next step with us? So it's a 5-minute input of your numbers, put your income and expense in, put your financing metrics of what size deal it is and what you're looking to do, hit run analysis, create your one sheet, and download, print, and share it with your lender. This is a 10-minute process from start to beginning. And now you can say to your lender, would you like to continue the conversation with me on this transaction? And the banker looks at it and they love it because they say, whoa, I've got a borrower speaking my language. And I've heard you say, and you and I, we both know, we can get denied at a bank. They don't tell us why. So now we're speaking bank language in the commercial property space, and we're walking in and we're saying, hey, I according to the software I'm using, I am pre-qualified. My transaction numbers are pre-qualified based on your own bank metrics. Would you like to continue the discussion? Yes, no.
Yeah.
And we can do that through our platform digitally, or we can do it on a download, print, share, and walk into your banker. And the bankers are giving us the testimonials we've gotten from the bankers. They love it because it's a more prepared borrower than they've ever seen. And it saves a lot of upfront due diligence time and discussion on vetting the transaction. They either want to do it or they don't. And if you've got a go validated one sheet in bank language and a bank says no, we're all of us entrepreneurs are going to do the same thing that you do with your business. I'm going to take it to the next bank because I know someone's going to do it.
Right.
Because so when the key to it is getting it validated within banking guidelines up front, and that's the conversation starter, and that's what we've created, and we took it from legacy software and private practice and have now moved it into the cloud where it's available to everybody.
So you mentioned a lot about real estate, and I appreciate you talking about exactly the things that they're looking at to get you approved for real estate transactions. But you guys, you have software that's also specifically just for business owners who are trying to get loans like SBA loans too, right?
Right.
And
We have in production right now an SBA. Our loan programs are called loan screeners. So we have a loan screener for apartment property, which is basically residential unit property over 4 units in a building. We've got commercial real estate screener for all of us doing any kind of commercial building, plaza type work. And then we have mixed use screener if you have one residential, one commercial unit or more inside of a building. Then we have an SBA 504 loan screener, which will be online in the next month coming out, which connects you directly to the SBA in their 504 program. The 7A program has a lot more moving parts. That screener's in production still, and we'll have that one out probably in the fall, but the 504 is going to come out now. And, people are excited about that, especially in SBA space, because look what you're going to be able to do now when you communicate with them. Let's face it, we all know how arduous anyone who's tried to do it, some of that paperwork can be. And you get the debenture side and with the bank and you're trying to sort through it. And if you can make it simple, so where now you can go in and streamline it, that would be, and know if you're going to get it before you apply, that's pretty cool stuff.
so what are the things that you're seeing that business owners can change then to become more lendable?
So, and then, to finish your question you asked me too about business credit, we have a basic business credit screener. And it's designed as just a clear conversation starter on the cash flow side of your business. And as you know, when you go to a commercial bank for a business credit line and you live this in your business every day, I believe, and I think I'm my opinion on this is that every bank is different how they underwrite a credit line request. It's not like commercial mortgages where it's more outlined and more common in the market in the metrics. Every bank is different. So we have to start the conversation with the bank as the business owner on proper footing. So what our screener does is allows you to put in your cash flows, your income, your expenses, and then add back things that you wouldn't realize that the bank lets you add back. So if you have your tax return, you can add back depreciation, depletion, your home office. We've got tooltips inside the software that guide you right through it. So it's really a 5-minute data entry process as long as you have your documents in your hand ahead of time or your pro formas prepared ahead of time. And you can walk the software right through, and the software will tell you if the interest rate for this facility you're requesting is something that your business is capable of debt servicing. So if you Ty got me $100,000 credit line today, and I say, oh great, and I put it out there, and then I don't realize that associated with that could be how much monthly payment. I still have to know as the business owner I can make the payment. So if the software says, hey, you know what, you can make the payment, that's where you can get empowered to walk into the bank and say, hey, according to the software I'm using, the $40,000 credit line I just asked for, I should be able to get. Now the banker has to argue with software to tell you that that's not what they're going to give you. It's no more an argument with you. You've got a defense mechanism in your hand to open the conversation on empowerment footing, saying, no, I'm good. Read this. And so it's starting to change the conversation, and the bankers like it because the bankers are like, one of the biggest things that they had told us in our surveys that goes on in commercial space is the expectation of the borrower coming in and the preparation of the borrower coming in is different from what they can actually do. So it creates a higher rejection rate than what should really happen. And so companies like yours that come along and package people perfectly to go in, for commercial credit, and companies like ours that allow people to DIY screen and sanity check their request at their own desk confidentially before ever speaking to the banker, are now changing the dynamic of how we can communicate and get answers from the banker faster and more relevant in today's just digital society, where frankly, if what time of day is it right now? It's 2 o'clock. I want to have my loan by 4. At least I want to know if I'm getting it. And I want to wait 10 days anymore.
You talked a little bit about the numbers that they're using. What within those numbers are they really looking for? I mean, they're really just looking to make sure, for example, property's cash flow, or that the applicant can pay back the debt. I mean, is that why a lot of the financials and a lot of the metrics and the things that they're ultimately looking for, is that what they're really looking for? Or is there other things that you think that you found to be very important as well?
Well, it's on the property side, the net operating income of the building being, and banks are a trust but verify environment. So whatever we tell them going in as borrowers, it's incumbent on them. They're required to verify it. They can't just accept our numbers as face value. So they're going to make sure that our numbers are real for net operating income, our interest, our income minus our expenses. They're going to do their debt service coverage ratio and want a coverage payment of at least 1.25 to feel as though there's a little buffer in the transaction between what the mortgage payments are and what the actual cash flow is. And then they're going to want to have some type of valuation by a third party to determine that their loan to value is intact in the transaction. Our software gets at all of those things for them right out of the front end. So when things start to change in the process during underwriting, you do have the ability to support and defend your position going in. Those are the 3 biggest ones. Now, there is the sponsor side, and there's always going to be the side on commercial real estate of the down payment. But our software allows you to tell them where the source of the down payment is if it's not you, if it's an equity investor, if it's a family member, if it's a friend, if it's a partner. You can put it right in the software, and you can demonstrate not only to the bank, but to the private lender how they fit in and how you can either debt service them or pay them. And if you have a transaction after all of those carve-outs are in there, in commercial bank loan, because not only do they take the net operating income, but they also have their own little carve-outs. They want to see things in there for things like management fees, et cetera, that you might not realize they require you put in. What Dan always says, and he's so right about this, is if it's a good deal for the bank, it's a great deal for you. So when you're looking at the numbers and you say, hey, I'm a go, and you're talking to your private investor and you're saying, look, I can fit the bank in and you, and I can exit everybody as per my business plan, it gives everybody a different level of communication than we see currently exists in the market between all of those features. People will often think, well, I can't, if I have a private lender, how's the bank going to feel? Just tell them up front. Send in the one sheet and show them that the transaction works with the lender in place.
Sure. And I think it's interesting because, if you look at SBA 7A checklist, for example, there's tons of documents that you have to submit. What people don't understand is that those documents are, just like you said, basically broken down in a lot of cases to numbers, and it's the formulas that they're really looking for. It's not the documentation. And I see people get caught up on that. They think the submitting of a loan is submitting all this documentation. What they don't understand is that the documentation basically is just getting broken down to numbers, which is what your software is doing, and that's ratios, those type of things they're looking for. So like when you're talking about debt servicing, for a lot of people that don't know that or don't know these ratios, they're basically saying is, hey, they want to make sure you're making 20-25% above what your actual expenses are or what the property's netting. So it sounds like things that business owners could do or property owners could do or purchasers could do to be more lendable. One of the easiest low-hanging fruit things is either lower your expenses and increase your revenue to improve that ratio, or even to find a better property or a good property that cash flows really positively. Is that accurate? Is that one of the biggest factors they're looking for?
And you're on this. And what we have right now is we have users of commercial loan success in the marketplace using the one sheet to negotiate property transactions. So I know you have people on to talk about apartments, and now we have people buying multifamily property, walking into the seller and saying, okay, you want, for example, $1 million against the property. Traditional commercial banking would require that I put 25% down, which means I'm going to try to get $750,000 from the bank. But because of your numbers, the bank won't lend that much on this property. So I need to offer you the following number or I can't make it work. It's not me. And so you start to realize in this type of a marketplace that we've come into post-recession in the lending environment, in a lot of ways, the lender drives the value of the commercial asset at sale. I mean, there's three people in the room that day. There's the buyer and seller and the lender. And when you're a buyer and you're going to buy a property for $1 million and you've arranged or have $250,000 to put down and you expect $750 from the bank and the bank says can't do it, the NOI numbers only support $650. Ty, where's that extra 100 coming from? It either comes off the purchase price or the buyer needs it. And when you find that out deep into the transaction and you're the commercial buyer and you've put in due diligence money and time and effort, or you're a seller who has already decided what you were going to do next with your proceeds, that creates a lot of stress in the transaction that doesn't need to be there when it can be vetted day one by simply pre-screening it with software.
What do you see in what you do that some banks are lending more than others?
Yes. Yes. And what we're also seeing right now is a nice comeback in community bank space. Some of the easing of the regulations, the community bankers are telling us, hey, we want to meet your people with one sheets. In the download, print, and share world, connect your people to us. It doesn't have to be just big bank driven. We're here to serve the community and we're here to help people get the loan that they want, especially if their numbers work. We're in business to lend here. So that's changing, but it still becomes, it's such a competitive bank environment for deposits that you always want to be able to communicate properly with your banker going in, because you don't ever want to put your banker into a position where they feel like it's a career lending decision to lend to you. You want to make the conversation start on the right foot so the banker looks at it, says, whoa, these number metrics work. This is the type of loan we would do. Yeah, I want to have a continued conversation with you. And this is just human nature. Now they're vested into the transaction. They're vested into you. They know your numbers work. They're going to help you versus just throwing a business plan or an executive summary with your own numbers on top of in a nice folder and bring or electronically sending it to the bank and saying, hey, can you read this and let me know? Let's just open the conversation and get an answer right now.
What do you see when it comes to credit quality? Is that another factor? I mean, are there factors like that your software takes into account, or are those the additional factors that you think are going to be important to lenders when they get in the door with that one sheet?
Yeah, we've stayed specifically on just the transactional numbers. There's just no way for software to really know all of the other things that exist inside of somebody's underwriting file. So the software doesn't specifically deal with that. We do in our business credit screener offer the ability for the borrower to tell the banker what they believe their perception of their credit score is. So that it opens the discussion because it's very pertinent in that space. In commercial lending space, like you can see things getting done with a 580 and up credit score. If it's a strong enough deal, you can see, but it tends to be bank to bank. That's where you start to break it off to where in commercial mortgages, the metrics are the same just about everywhere, but bank to bank will make different decisions based on maybe asset quality, based on portfolio distribution at the time. These are things that none of us would ever know out there about what's actually going on behind the curtain at a lender. And that's why we need just one sheet of paper to be able to distribute as efficiently as we can to as many as we need to be able to get our loan to be said, yes, I want to move you forward to application. Because once they've moved you forward to application, they really don't want to deny you. Once they've moved you in, they've done it because they have invested in you. I mean, they believe that it costs them money to reject you nationwide on a commercial loan request. So they don't want to take the application in if they think that they're going to reject it. So if you get to application and you're a go there, unless there's something that is in the file that either you didn't know or they didn't know, you're most likely going to be successful with what you want with them.
Now, what kind of information is on this one sheet?
So the one sheet is an output of your NOI. It's got your typical bank carve-outs that would be inside of a property, management, et cetera. And then it shows the banker number of units in the transaction, number of units in the building, rents that are being paid now, possibility for future rents, expenses, et cetera, et cetera. It's just all bank metrics coming out. The DSCR is prominently pasted in the front. It tells them where the down payment source is, how much it is, what the loan request is, what's the interest rate that the buyer is seeking, the terms, the amortization schedule. It's all there from your inputs that you put in based on tooltips that the software helps you with each step of the way.
And when you said this works with all kinds of properties, right? Mixed use, commercial.
Yep. Yeah.
And then you also mentioned SBA 504. For those people who don't know, that's real estate. SBA is real estate. And then you're building something right now to work with 7A, which is where anybody could basically go to get an SBA loan.
Yep. Yes. Yeah. And that's a harder thing to build because, as you know, the amount of things in the intake form area of SBA can be variable and different because you're blending the business income along with the property income oftentimes. So there can be a lot of things that are moving parts there from a software standpoint. It's just a heavier lift, but it'll be something that we do have soon for people. People have asked us for it, so we'll be responding to get it.
So what do you think? I mean, why is it so important that people know that they can get approved before they ever even walk into the bank?
Oh, think about what goes on. I mean, from me to you to everybody out there who's ever been in the process of either for their business or for buying property, there's just that trepidation or angst in the commercial bank process, all the way down to absolute dread, where no matter if I see it from people who are a novice in the business for their first transaction all the way up to seasoned professional. There's such a mystery and unknown and just a feeling of uncertainty approaching the commercial bank about a transaction. And when you think of all the things in a due diligence file for things that you do for property, or how important those decisions are to get the financing, think of your customers that you help. I mean, the impact that goes on. I had one guy with our business credit screener tell a quick story that I think you'll like. He's in the health services business, and he was starting a health coaching business, and he has all the credentials to do it. And he's a Dave Ramsey guy. He doesn't like debt. So he said, I understand in business, I have to employ some leverage. Could you help me? So I took my business credit screener, put his information in, and gave him a one sheet. This is at the time when we didn't have it in the cloud like we do now. We were using it privately. So he took it to his banks and he got a credit line. I hadn't heard from him for a few months. And I get a text from him. Now, this is a guy who is in top shape. He's like, the guy who has enviable abs that we would all want, right? And I get this text from him, and it says, "My fat pants are loose." And I'm like looking at this going, what are you talking about? Your fat pants? So I call him. I said, what do you mean? He goes, no, I'm sorry. That was from a customer, a client. He goes, I took your advice. I took your printout. I went to the bank. I got a credit line. Because of that, I opened a new facility and I got the equipment I needed. And that's from a client. I'm now changing people's lives.
That's awesome.
Isn't
that's powerful. Yeah.
And you just sit there and you do that in your business.
Yeah, it's really rewarding.
And you just sit there and you just say, wow. And now this was a guy who was absolutely scared to approach a commercial bank.
Right. Which we see all the time.
And it was like for him to get empowered with one sheet of paper showing that, no, he could afford it. He could do it. And he could walk in and he could change the conversation to be in his favor right at the gate with the banker. And the banker brought him in. We have another young guy who just started his investing business, 2-family property. Goes, puts the purchase and sale in, goes down to the bank with his one sheet, sits down, download, print, and share world, puts it on the banker's desk. Banker looks at it and says, what is this? And he goes, this is software I bought to vet my transaction. It's DIY, did it myself, and I print it out and I show you that it works. I'd like to know if you'd like to do my loan. So the banker says to him, hang on a minute, gets up, leaves the room, comes back in, brings in the senior vice president of lending. They sit down with a guy. The kid goes, oh, I've got the senior vice president room. I'm feeling pretty good right now. They did his loan. And just the empowerment that young investor got. He will never have any dread of the commercial bank process again. He'll be confident going in that he can level up to the next size property. And for anybody out there in residential investing land who wants to get into commercial, or anybody who's had a negative commercial bank experience, you can change it all around for yourself by sanity checking your transaction first, and then speaking to the bank after you know whether or not you qualify for a commercial bank application before you even speak to them. It's such a different feeling when you start the process that you can almost eliminate the bank as a boogeyman in the transaction of due diligence. It's so important. And you see this with what you do. You do a wonderful job preparing everybody before they actually go in for financing. And this is just one more piece to add to all of that, where it's DIY at my own desktop or on my mobile phone in front of a property. I can use Commercial Loan Success anywhere. It's in the cloud. So I just have a username, password. I go in, and in 5 minutes, I can pre-screen a property and determine an offer to a seller and know how my bank is going to react.
Now, if somebody doesn't qualify, does your software tell them things they could do to be able to improve that so they will?
Yes, very cool part of it. There's a stop condition. So if their loan request as they've input it is, or their transaction as they've input is not likely to get to a loan request or to an application, the software will pop up and say stop, and it'll tell them why. And it'll start to offer things like your loan amount is over based on your inputs by what this amount is, what you said in the beginning. Get some more income, reduce expenses. Happens in all the screeners, be it the business loan screener. It might say you need more income, less expenses. It allows you to manage the transaction. You can go back in and do edits. You can do what if scenarios. What if I raised rent $200 on the property? What would happen? We have compatible refinance screeners for all of our commercial property screeners. A lot of people who already own property would want to refinance. Can they cash out? Now you can know and defend yourself to the institution that, hey, these are my numbers. This is what standard underwriting metrics say I should be able to get on this property.
So we talked a lot about property, but you've got this business credit and this business loan screener. So what do those take into account? Like, what kind of metrics do those take into account for somebody just to know if they could walk in and get a regular loan or a regular credit line, or does it have to be related to property?
Oh, no, you can do it on a basic business screener. So what you would do is you have your income and expenses. Historically on your business is preferred. If you're doing a pro forma and it's a new business, you have to tell the bank that. As we know, regulated banking space may not be able to lend the same way on a business that's not profitable,
Right.
but alternative lenders can. So one of the things the screeners allow you to do is determine who is the best source for you. And the same type of stuff you're doing for your clients. What is the best source for somebody starting out? Maybe it's not a regulated bank, but their numbers work on their first 6 months of income. Or their pro forma is outstanding. They've got plenty of cash in the bank to back their investment. And a banker would lend to them, especially in alternative space. So the screener is going to take into account what your inputs are. And then you can add back based on the tooltips all sorts of things that you don't realize the bank will take back into account, right down to your home office deductions that you may have taken last year. Suddenly you can take a business that may have had a small loss and make it a little bit profitable. And then there'll be different carve-outs and metrics inside of that screener that that allocate for interest rate ratios. So your coverage is of 1.25 or 2 or 3 or whatever it is that your business is. It's pre-programmed into the screener for just a very basic conversation starting 1.25, and lets you then go to the bank and say, hey, according to this, it says I can afford interest payments for this amount with my business. And you'll input things that you already have. If you have a vehicle loan for your business, you already have a business credit card with a balance on it. You already have other things that'll take into account what you already have for credit and tell you what you can afford for more interest payments on credit. Now, you and I both know we get into the bank's going to say, well, it's not just interest. We'd like a little principal paid back. And you don't really know what that'll be because each lender is different with what they want for principal. A business credit card might be 1%. A business credit line might be 2%. You don't know what they're going to take back until you sit with them. So it can change your numbers based on just your pure interest carry. But you're showing your business is capable of making payments. And that does two things for the business owner. It makes you feel good because you're the business owner. You're like, if I'm going to take on this debt, can I service it? And now I know I can. And then when I apply for it, I feel like, okay, I can get this because I can service it. And then it allows me to be able to go back and forth with the bank to arrive at a fair number for credit based on what their needs are and what mine are and what my objectives are with my business. And then you're right inside your CLS dashboard. You keep it. Our subscriptions are annual, so you're always going to have access to your dashboard as long as you're inside of CLS. And you can then manage your financing transactions going forward. So you look at your business this year, next year, maybe where would I like to be in 2 years? And you can start to plan for growth and profitability inside of how you use leverage, because using leverage is an important skill for the business owner.
Sean, what kind of things do you hear feedback from applicants when they get in there that they kind of didn't know or think about until they started using the software? And then it was like, wow, I would have got denied, or that's why I did get denied, that they discover from using it.
You know, it's funny. It's not just the applicants, it's also the bankers. We've had the bankers come back to us and say with our business credit screener, wow, this is really cool. I actually learned stuff in here about how, it is that we can help people feed us information. And so they, they like it. But no, we've gotten exactly that coming back where people said, I didn't realize this. All I needed to do was tweak it this much. We've had people, have to take rents and season them for a few months to be able to get them to where they wanted to be before they applied, because the rents were only like $100 a door off, and they needed to raise the rents and document the new cash flow numbers. So yes, we've gotten all of that stuff from feedback from our users and the screeners. And it's always rewarding when you hear from the users.
So what are some of the reasons that you see denials that are surprising to people? I mean, why are these people getting denied in a lot of cases that they just don't realize until they're using something like this? It's like that aha moment.
I think that with our screener, once people find that their numbers work, they get empowered. And then when it gets changed to now looking at them as the principal, and they're not properly set up in their business, those are, as you do this for people. It's in an organized system to be able to set people up for credibility, to have all the things that you need to have in place, right down to a legitimate email address for the banker to reach you to exchange documents. What I'll tell them is you got to have a phone number that they can reach you at. You should appear founded in the community. There's all that stuff that goes with it that's fixable. What people are most afraid of is, oh, gee, my numbers don't work, or in my past there's this issue. And that may or may not be true once your numbers work, because your numbers are the most important part of the transaction. And then they're going to get into your history of paying back. And what have you done before? And there's all sorts of ways that you can fix all of that. It's really hard to fix transaction numbers that don't work.
John, as we wrap up, what should our listeners be doing? Anybody that's watching or listening today, what should they do as a next step to see how lendable they are, to kind of get rid of this fear that they have of walking into a bank naked per se, and actually walk in with the one sheet or that ammunition that they need to know that they kind of have some kind of control, that they have a chance of getting this loan, and to impress that lender so they have the best chance of getting it?
It's like I said in the beginning, and this is what we said to ourselves when we decided to launch nationwide. I mean, who wouldn't want to know? Who wouldn't want to know if they pre-qualify and are likely to go to a bank application before they ever speak to the banker? So everybody can go to commercialloansuccess.com. There is that's our homepage, and you'll find all the information about our software there. And we've also put together today for listeners who would put up with listening to me and you for a half hour, right? We always like to give a free giveaway for people who are willing to come this far and listen to us during the day. And we did that at web.commercialloansuccess.com/TY, TY for you. And what we've given away there is chapter 2 of our new book, Commercial Loan Success. I think you'll like chapter 2. It has probably a lot of, after and not seeing what's in your program exactly, but knowing what you teach, it's a lot of the preparatory stuff that you need to do before you decide to even embark on a commercial bank loan. Your LLC, your business, your identity, all that stuff set up properly. And then we offer a nice link to a discount for the software for everybody in the audience who wants to get a demo and wants to try the software and get a discount.
Oh, that's awesome. And that's at web.commercialloansuccess.com/TY.
Yeah.
All right,
Yep.
cool. So I went ahead and I'll make sure everybody that's on the show resources page. So everybody listening, look, how lendable are you? I mean, obviously that's something you want to know if you have any interest in getting credit, getting financing, especially if you're a real estate investor and the property comes into play. So you might as well as do something that's been working for 20 plus years behind the scenes that now can be put in your hands to see how lendable exactly are you. I'm a big advocate of this. I think it's insane to walk into a bank when you have no idea if you'll qualify. And here's why. Because what we find is the majority of bank loans are denied for reasons that are completely within the applicant's control if they would have known about that going in. And the fact that they don't know, a lot of people give up on solutions that could work for them if they just had a tweak or an adjustment here. And this gives you an opportunity to find out how lendable you are and to set yourself up for success so you can walk in with confidence and know that you have a scenario, a transaction, a business that is lendable. So make sure you check out commercialloansuccess.com, a bunch of really cool products that are available there. And then also make sure you grab chapter 2 of this book at web.commercialloansuccess.com/Ty. If that's too much to remember, no worries. Go to the show resources page. You can link to it right there and then grab this free chapter. And you'll get a lot of great information on the website and on this page. I can't tell you how much information I was able to get that really got John and I into another 30, 40-minute discussion before and after the show to talk more about synergy between us too. So make sure you check out web.commercialloansuccess.com/Ty to grab the free chapter of your book, and go to commercialloansuccess.com as well to learn more about the products that they offer and the different screening tools that you can get so you have the best chance of success. John, thanks for coming on today, man. This was really cool. I kind of geek out when I get with people that like share the same passion, the same interest, and that have recognized the same problems, and that we're kind of working together towards those solutions, man. So I've really enjoyed our time together today.
Oh, thank you so much. It was great being here.
And thanks everybody very much for tuning in. Make sure you check out commercialloansuccess.com and web.commercialloansuccess.com/Ty. Thanks everybody. Have a great day.